how the 2024 election will impact the stock market and personal portfolios. Welcome to our channel. Today, we're diving into a topic that's on everyone's mind: the 2024 election and its potential impact on the stock market and your personal investment portfolios. As we approach this pivotal moment in American politics, it's crucial to understand how the outcome could shape financial markets and influence your investment strategies. Elections often bring uncertainty, and the 2024 race is no exception. With various candidates proposing different economic policies, the stock market is likely to react in ways that could either benefit or challenge your investments. Whether you're a seasoned investor or just starting out, the decisions made in the upcoming election could have lasting effects on sectors like healthcare, technology, and energy. In this video, we'll break down the significance of the election on financial markets, exploring how political shifts can lead to market volatility or stability. We'll also discuss what you can expect in terms of stock market changes and how to adjust your portfolio strategies accordingly. By the end of this video, you'll have a clearer understanding of how to navigate the potential ups and downs of the market during this election year. So, grab a seat, and let's get started on preparing your financial future amidst the political landscape. Understanding the political landscape, current climate leading up to the 2024 election and its potential implications. As we gear up for the 2024 election, the political climate is charged with energy and uncertainty. Key figures are emerging, each with distinct economic policies that could significantly influence the stock market. For instance, candidates advocating for increased government spending on infrastructure and green energy may boost sectors like construction and renewable resources. Conversely, those pushing for deregulation could favor traditional industries such as oil and gas. Understanding these dynamics is crucial for investors. Different political outcomes can lead to varied impacts across market sectors. A Democratic victory might usher in policies that prioritize social programs and climate initiatives, potentially driving up stocks in tech and clean energy. On the other hand, a Republican win could lead to tax cuts and deregulation, which might benefit financial and industrial sectors. Looking back at historical precedents, we see that elections often create volatility in the stock market. For example, the 2016 election saw significant market fluctuations as investors reacted to the unexpected outcome. Similarly, the 2008 election led to a market downturn as the financial crisis unfolded. These patterns remind us that the political landscape can have immediate and lasting effects on stock performance. In this segment, we'll delve deeper into these key political figures and their proposed policies, helping you understand how to position your portfolio for the potential shifts ahead. Stay tuned as we explore the implications of this evolving political landscape. Market reactions to election outcomes, how the stock market typically reacts to election results. As we approach the 2024 election, it's essential to understand how the stock market has historically reacted to election outcomes. Past election cycles reveal a pattern of immediate effects on stock indices, often characterized by volatility and uncertainty. For instance, after the 2008 election, the market experienced significant fluctuations as investors grappled with the implications of a new administration during a financial crisis. Similarly, the 2016 election saw the S&P 500 initially drop, only to rebound sharply as investors adjusted to the unexpected results. Certain sectors tend to be more volatile during election years. For example, healthcare and energy stocks often react strongly to political changes due to the direct impact of policy decisions on regulations and funding. Technology stocks can also experience swings, particularly if candidates propose changes to data privacy laws or antitrust regulations. Understanding these trends can help investors make informed decisions about where to allocate their resources. Investor sentiment plays a crucial role in market movements during elections. Fear and uncertainty can lead to sell-offs, while optimism about a candidate's policies can drive buying activity. This emotional response often results in short-term volatility, making it vital for investors to stay informed and focused on their long-term strategies. In this segment, we'll analyze these historical trends and discuss how you can prepare your portfolio for the potential market reactions that may follow the 2024 election. Stay tuned as we unpack the intricate relationship between politics and the stock market. Sector-specific impacts, analyzing changes based on election outcomes. As we approach the 2024 election, it's crucial to analyze which sectors may experience significant changes based on the outcomes. Different political policies can create winners and losers in the stock market, and understanding these dynamics can help you make informed investment decisions. One sector likely to benefit from progressive policies is healthcare. Candidates advocating for expanded access to healthcare and increased funding for public health initiatives could drive up stocks in companies like United Health Group, UNH, and Moderna, mRNA. Conversely, if a more conservative administration prioritizes deregulation, companies in the pharmaceutical sector might face challenges, impacting stocks like Pfizer, PFE. The technology sector is another area to watch closely. With ongoing discussions around data privacy, antitrust regulations, and tech taxation, the outcome of the election could significantly influence major players like Apple, AAPL, and Amazon, AMZN. A candidate focused on stricter regulations might create headwinds for these companies, while a more business-friendly approach could lead to growth opportunities. Energy is also a critical sector in the election context. Candidates promoting green energy initiatives could boost stocks in renewable energy companies like NextEra Energy, NE, and Enphase Energy, ENPH. On the other hand, if fossil fuel policies are favored, traditional energy stocks like ExxonMobil, XOM, may see a resurgence. In this segment, we'll dive deeper into these sectors, highlighting specific stocks to watch as the election unfolds. Understanding these sector-specific impacts will empower you to navigate the market more effectively in the coming months. Investment strategies for 2024, actionable tactics for post-election success. As we gear up for the 2024 election, it's essential to have a solid investment strategy in place to navigate the potential market volatility that may follow. Here are some actionable tactics to consider for your portfolio post-election. First and foremost, diversification is key. By spreading your investments across various sectors, such as healthcare, technology, and energy, you can mitigate risks associated with election outcomes. This approach helps cushion your portfolio against significant losses if one sector underperforms due to political shifts. Consider including a mix of growth stocks, dividend-paying stocks, and even some defensive assets like bonds or commodities to create a balanced portfolio. Next, think about your investment horizon. Long-term investors may want to focus on fundamentally strong companies that can weather political changes, while short-term traders might look for opportunities to capitalize on immediate market reactions to election results. If you're in it for the long haul, consider investing in ETFs or index funds that track broader market trends, which can provide stability over time. Lastly, staying informed and adaptable is crucial. Keep an eye on the news and market analyses to understand how election outcomes are impacting various sectors. Being flexible in your investment choices allows you to pivot quickly if necessary, whether that means reallocating funds or taking advantage of emerging opportunities. In this segment, we'll explore these strategies in more detail, empowering you to make informed decisions as we navigate the post-election landscape together. Potential risks and opportunities, navigating the election landscape. As we approach the 2024 election, it's vital to discuss the potential risks and opportunities that may arise from the results. Elections can lead to significant market corrections or booms, depending on the political climate and the policies that emerge. For instance, if a candidate with a pro-business agenda wins, we might see a surge in stock prices, particularly in sectors like technology and energy. Conversely, a victory for a candidate advocating for increased regulation could trigger a market correction, especially in industries that thrive on less oversight. Geopolitical factors also play a crucial role in market stability during election years. Global tensions, trade agreements, and foreign policy decisions can all influence investor sentiment and market performance. For example, if the election results in a shift in foreign relations, it could impact sectors like defense and international trade, leading to increased volatility. Keeping an eye on these geopolitical developments is essential for understanding the broader market landscape. As you consider your investment strategy in light of these potential changes, it's important to assess your risk tolerance. Are you comfortable with the possibility of short-term losses in exchange for long-term gains? Or do you prefer a more conservative approach that prioritizes stability? Understanding your risk appetite will help you make informed decisions about your portfolio. In this segment, we'll delve deeper into these risks and opportunities, equipping you with the knowledge to navigate the post-election market effectively. Stay tuned as we explore how to position yourself for success in this dynamic environment. Key takeaways on the election's impact on the stock market. As we wrap up our discussion on the 2024 election and its potential impact on the stock market, let's recap the key insights we've covered. We explored how the political landscape can create both risks and opportunities for investors, highlighting the sectors likely to benefit or suffer based on election outcomes. We also discussed the historical patterns of market reactions to elections, emphasizing the importance of understanding these dynamics to make informed investment decisions. Being proactive in your portfolio management is crucial during this time. Diversifying your investments, assessing your risk tolerance, and staying informed about geopolitical factors can help you navigate the potential volatility that may arise post-election. Remember, the decisions you make now can significantly influence your financial future. We encourage you to engage with us. If you found this video helpful, please subscribe to our channel for more financial insights and strategies. Don't forget to like this video and share it with friends or family who might also benefit from understanding the intersection of politics and investing. Your engagement helps us create more valuable content tailored to your needs. Thank you for joining us today. We look forward to continuing this journey with you as we explore the ever-evolving world of finance and investment. Stay tuned for our next video, where we'll dive deeper into specific investment strategies to help you thrive in the post-election landscape.